What are the greatest risks to your portfolio right now? Hi, I'm Hugh Matthews, Independent Wealth Manager at Crystal Wealth Management. What an epic time to be alive. The only thing is, our money is exposed to many different categories of risk, possibly more so now than ever before. 2022 was an outlier year, and as we often see in the markets, good news is bad news, good news is good news, bad news is good news, and bad news is bad news. Yeah, go figure. Investors tend to feel the pain of losing money more than they feel the pleasure of their assets going up in value. And that's understandable when you consider how hard you had to work to earn it in the first place. I guess it's a bit like breathing. We invest and expend. Not only do you have the double-edged sword of market risk in return, where your investments can go up or down with market volatility, but we now have greater vulnerability to interest rate risk, which has recently adversely affected the performance of debt-based assets like bonds, which have historically been regarded as a safer, lower risk investment. Timing risk. What if you try and outsmart a bear market by moving into cash until things clear up and the markets improve? We call it a bear market when markets are trending down. Bears attack down, bulls attack up. But how do you know when the market has reached the bottom? On average, half of the total bull market returns occur in the first year following a bear market. That bounce back from recessionary lows to the start of a new cycle can happen violently and quickly. Just look at March of 2020 for confirmation of that. Missing out on that initial period of gain can be catastrophic to your portfolio's performance. Liquidity risk is the risk of being unable to sell your investment at a fair price and get your money out when you want to. To sell the investment, you may need to accept a lower price. Sometimes it may not even be possible at all to sell the investment, such as during a housing market crash. Then you have currency risk, where fluctuations in international currencies will affect value. Imagine what would happen if the petrodollar was to lose its international reserve currency status, which is held since 1971, to the BRICS nations, and how this would affect the value of the dollar against, say, the Chinese yuan or the Russian ruble. Counterparty risk measures how likely it is that the other party may default on its obligations. You may have thought that your money was safe in a bank, but did you know that in 2021, the Bank of England passed legislation enabling them to take your money from your account should the bank become unstable? This is much like what was done in Cyprus in the 2013 bank bail-ins, not to be confused with previous bank bail-outs. I talked about inflation risk in my previous video. Wages have been rising at their fastest rate in more than 20 years, but still lag well behind the soaring cost of living. When adjusted for rising prices, wages actually fell by 2.7%. If inflation is in excess of 10%, then real interest rates are still in negative territory. All currencies are fiat currencies, which means they aren't actually backed by anything. The pound used to be backed by sterling silver, and you would take your promissory note to the bank in order to exchange it back into pounds, LBS pounds of actual silver. Fiat currencies don't last forever, and unlimited money printing devalues them through inflation, meaning a whole deck of cards is actually vulnerable to systemic risk. So that's another one to bear in mind. This is a 50 million German mark note from 1923. This is a 50 billion Yugoslavian dinara note from 1993. And this is 20 billion Zimbabwean dollars. So, if you owned those, then you would be a multi-billionaire, yes? Well, sadly not, as those currencies were destroyed by hyperinflation, so they are now just worthless pieces of paper except for their historical value. As you can see, there are many different types of risks you need to be aware of and try and protect yourself from, and those are just a few. The world has a very different geopolitical landscape from what it was just a few years ago, but there are obvious trends that a smart investor would be wise to notice and exploit to optimize and grow their portfolio, namely, probable escalation of international conflicts involving Russia and China, likelihood of further energy price increases and energy and diesel shortages, the deindustrialization of Western Europe, likelihood of further supply chain breakdowns, probable imminent international food shortages and famine. That was announced by the Bank of England Governor Andrew Bailey. Warnings of potential cyber attacks from the World Economic Forum. And finally, the planned implementation of new central bank digital currencies, or CBDCs. Will these new types of digital money issued directly by central banks run alongside or completely replace our existing currencies? So, not a lot for us to worry about there then. Many people aren't aware of all these factors, but to a forward-facing, prepared investor, they could present themselves as significant opportunities. How future-proof is your pension and savings to this brave new world? Some people think that using a financial advisor is going to be too costly. No. As you may well now appreciate, not working with an advisor could well actually end up being way more expensive. We are fully transparent. All our charges are listed explicitly in our reports before we ever do any business, and are fair and competitive. My advice should more than pay for itself in the long run, otherwise I don't think clients would use us for very long. Sometimes people just want an expert second opinion to validate a target they've come up with themselves, or to help remove the emotional baggage or fear and complexity around their finances. We monitor portfolios and let you know if there are any problems or opportunities that you're missing out on. If you want to invest ethically, then we have some solid ESG portfolios that will certainly interest you. Also, did you know that it is possible to invest your pension in alternative assets such as physical gold and commercial property via a self-invested personal pension, or SIP, if you are so risk inclined? I take time to properly understand your needs, goals and risk tolerance so that you can achieve them with a coherent strategy. And I save you time, stress and worry, and I'm always there to stop you falling into the common traps and pitfalls that could cost you a fortune. So, start adding value to your future now. Let's schedule a call and I'll show you how.